Now that consumer behavior is normalizing, it's been great news for e-commerce stocks like Amazon, Mercado Libre, and Shopify. Remember, in the beginning stages of the pandemic during lockdowns, online spending soared, and then when economies reopened, online spending dropped, and now consumer behavior is normalizing back to pre-pandemic trends. So, it's understandable that investors are becoming more interested in these e-commerce stocks. But which one is the better buy today? Amazon, Mercado Libre, or Shopify? That's the question I'm going to answer this video, comparing these three e-commerce stocks across critical financial metrics, including revenue growth, profit margin expansion, return on invested capital, and of course, looking at the valuation to determine which one I think is the better stock to buy today for long-term investors. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's begin with a revenue growth comparison. And across the board here, you can see Mercado Libre demonstrating the best revenue growth across these three e-commerce companies at 35% in the most recent quarter. But since 2021, it's been demonstrating the best revenue growth. It surpassed Shopify as the leader in revenue growth here. Amazon, of course, has been in third place among these three, but it's the larger company, right? Amazon is close to $600 billion in annual revenue, whereas these other two e-commerce companies are nowhere near that number. They're only a fraction of the size of Amazon. And so they have a larger growth opportunity when you're smaller, especially with Mercado Libre. Not only is it a smaller company compared to Amazon, but it's also operating in a different country, primarily in Latin America, where the growth in that country is faster than the growth in the United States. And again, for a similar reason, economies in Latin America are less developed than the United States economy, and so they're growing faster than the US economy. So Mercado Libre is benefiting from both of those tailwinds as the faster growing company, and I suspect that will continue over the next several years as that economy will grow faster in the Latin American region compared to the United States. So, looking at revenue growth, it's clear to me Mercado Libre will be the leader for several years. I think Shopify will be second place and Amazon will be in third place in terms of revenue growth. But when you look at total revenue, not just revenue growth, Amazon will be growing faster than these two, probably combined, because for Amazon to grow by 10% would mean that it increases its revenue by close to $60 billion, whereas 10% growth for the others won't be anywhere near that number. The next metric I wanted to compare these three on is the operating profit margin. And they're close in this metric, right? There is no clear leader here. 10.95% for Shopify, Amazon at 9.77%, and Mercado Libre at 9.53%. Looking ahead, I would suspect Amazon will take leadership in the operating profit margin in future years as the company's investments in growth will decrease as it reached larger scale, and Amazon's more profitable segments are growing faster than the business overall. Amazon's cloud services segment, which has profit margins closer to 35%, is growing faster than the business. Then you have Amazon's advertising segment that's also growing faster than the business. So Amazon's expansion in profitability will likely be better than the others. Mercado Libre has noted that it will be investing more in its growth opportunity. It has better growth prospects, so it will need to continue investing in its growth opportunity. While Shopify is playing back and forth here with the logistics business, it divested away from its logistics business, but it still owns an equity ownership of that business. It'll be interesting to see what Shopify ultimately decides about logistics. If it wants to generate better profit margins, it will not try and tackle logistics again. If it wants to be a more all-encompassing, comprehensive service for merchants, it might try and onboard logistics again in the future. That remains to be seen. For now, it looks like they're very close in operating profit margins, and Amazon will likely pull ahead in this metric over the next several years. When looking at return on invested capital, Amazon and Mercado Libre are tied at 18%, with Shopify coming in at 13.8%. Amazon has done an excellent job in making large investments and having those investments pay off. Amazon has taken a very capital intensive business model and made it very profitable. That's a difficult accomplishment. But if you can accomplish that, if you can be excellent in this business strategy, it gives you one of the best competitive advantages because it's so difficult to do. It can't be easily copied. Not unlike, think about a YouTube channel, right? You've probably seen many other YouTubers copying my headlines that I might make for a video because they noticed that video got a lot of views. It's very easy to copy my headlines, right? But it's a lot more difficult to study the 1,500 hours that's required to get your CFA, right? To pass those CFA licenses and to get the CFA that adds credibility, that adds some competitive advantage if you're trying to have a finance YouTube channel, right? It's a lot easier to just say, oh, there's that headline that got a lot of views. Let me just copy paste and use that to try and gain the same amount of views, right? Similar story with Amazon in taking this comprehensive, all inclusive business model with the capital investments in fulfillment, in logistics, across the board in e commerce, warehousing, all of that. It's a very difficult business task. But if you can achieve it, very difficult to copy, very difficult to replicate. As you've noticed, there isn't really any challengers trying to do what Amazon is trying to do. Maybe you could argue Walmart is trying to do something similar, although not to the degree and magnitude that Amazon is doing with its investments in fulfillment and logistics and growing the business to the size it's growing. I guess you can say Walmart is the only other one, but Walmart is not having the kind of success that Amazon is having in this category. Finally, let's compare these three on valuation. And looking at the forward price to earnings ratio, we notice Shopify is the most expensive at 71. Then you have Mercado Libre at 43. And finally, Amazon is the cheapest at 32. Now, Shopify and Mercado Libre do have better growth prospects in revenue growth and earnings per share expansion over the next several years. Shopify is doing a more asset-light business model, so it has the potential to have higher profit margins in the long run. Although it hasn't delivered them just yet, it does have the potential based on the foundation it's built on, especially if it does not return to trying to do fulfillment and logistics. Mercado Libre, meanwhile, does have better growth prospects, is in a region that's growing faster, but it's also in a riskier region with a more volatile economy, with more volatile geopolitics. So it's also a riskier business. So given all of that, and given that Amazon is trading at the cheapest valuation, if I was to pick between these three stocks and try and understand or try and say which one is the best one right now, I would say Amazon is the best out of these three stocks, in my opinion, right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.